Welcome back to another video, guys. The trading week is over. It's currently Friday, so market closed about 2 hours ago. So I'm making this video just to recap the trading sessions and the price action that we should be trading from 9:30 opening to 12 and sometimes 2 p.m. I did not trade Friday actually, so I didn't really need to analyze Friday. After I looked at it, I knew it was terrible after I saw it. So there's not really much to analyze Friday, but Monday, Tuesday, Wednesday are reversal for the weekly PO3, and then Thursday were good days to trade. I mean, the price action reading was it was all right on the higher time frames. The lower time frames is where it got a bit choppy for a few of the days. So let's just dive into this. First off, the cycles for the week. This is an obvious manipulation on Wednesday, so it's a XAMD distribution and expansion, not even expanding us to our crank correlation high, which was this high of the week. So not even taking us to buy side liquidity. So a little interesting because if we are going to be bullish, then we should be taking out all time high next, to be honest, because we have all this low resistance liquidity. But if we are bearish because we are in a distribution cycle and our manipulation was bearish, so we'll see. And our manipulation was bearish to send us to all-time highs if we look previously. So distribution could be a retrace. So I'm just, seeing what's going to happen in the market for the rest of the year and kind of theorizing based on what price action is doing. And we're just keeping up with it every week at a time. Every time new data gets printed, more candles are drawn on the high time frames, then we know what's happening. Because the banks don't even trade on the daily, they use the weekly and the monthly and the 3 months. So like shit moves real slow sometimes. So let's start off with the 1 hour chart. This is what I have pulled up because it's the easiest to read the week. We can see that. And just moving to regular trading hours, this is our new weekly opening gap on the regular trading hours that I marked out for the quadrants for. Not really a reason, just so you can see kind of where things lie in the week and on the PO3 because our new weekly opening gap is the base of our PO3. So things from here on the electronic and regular trading hours are just important because opening from here, I know the PO3 is wrong on there, but opening on electronic trading hours, this is the PO3, and so this point of reversal is really our safe stop when we get into trading the second half of the week. So we can determine our ranges that we're going to be trading in and, things of that nature. So let's go to the 5 minute because I actually start with the 15. 15 would be clearest. So noting the times that we're trading, 9:30 to 12 and then 2 p.m. on Thursday and Friday. And we have our true week open that finishes our market maker buy model with buy side liquidity being our high, previous week low being our actual, this is actually previous week low. This gap opened and then we swept and then didn't sweep in the last week. So this is previous week low. And we have the prime correlation that created we had actually a weekly cycle and then a daily cycle down here, which created our pivot in the marketplace. And the real telltale sign of this pivot is usually on the 1 hour. 4 hour slower, but 1 hour is very, very clean. If 1 hour structure flips like this, we have two candle movements. We have two candle. Okay, I can do this. Or two candles. When this trades into OTE it's kind of like a break. No, I don't want that. Kind of like a breaker, but really when this trades into OTE and then the opposing OTE on the lower time frame that's an aggressive color, isn't being respected. So when this OTE pivot, we created a DC. If we were going to move lower off this pivot in the market, which before it was a pivot, it was just a retrace, then we would move. Yes, we can move up here, but we wouldn't have swept out this high again, and we wouldn't have gotten above the new daily opening gap. So, like extra confirmation, waiting for this new day to open in Asia session by you could even by 11:30 p.m. you would have been able to tell that the rest was going to be longs from there, and safe stops would be usually around like where this DC low is, where this low is right here. So we're looking for trading ranges up between those. If I don't really trade Asia, so I can't say I speculate on Asia, but like this is how I would narrow down price and how we're trading through the week, because when that comes into the daily, it makes a big difference. So we looked at the 15-minute, we kind of got a lot more data for how price is moving, but the biggest things, and especially at the openings, we look at the 15-minute on openings, I want to notice two things. One is the fair value gaps. What are we doing on 30-minute opening? And two is the ranges of our overnight. So here's a range for overnight, OTE, before our opening. It's right there. And this was actually a DC. So this is Monday. We had a sweep. This was a 90 minutes and a daily cycle. We did not have a lower time frame crank correlation. So this discount sweep was the 90-minute and discount OTE sweep to send us to buy side. That was the trade for that day. And you see, we didn't even, like, this is on Monday, Sunday. Okay. No, I thought that was Monday. So even using this range, right? Even using, this is previous week low. This is a low of the previous week. It's not the lowest low, but it's close. We didn't trade within the previous week's range. You notice how we opened a new weekly opening gap and we kind of just traded within that. So the reason why I actually took longs on Monday, the reason why I took those longs was because I actually noted that this wasn't the range that we're trading in, so we don't need to drop lower. I was initially trying to think that we were going lower because we actually had a DC between this high with YM doing some crazy shit. So our range is established. Then buy side liquidity is taken. That is our Monday trade. And you can see here our 12 p.m. is literally when we're reversing. If we go by the hourly close, 12 p.m. or even the 5-minute is actually better to see this on. But you see how we close literally where our higher highs are for the entire range of the day. And then by 12 p.m., usually the session is over and the major movements are done for the day. So 2 p.m., sorry, I meant 2 p.m. there. So 2 p.m., 12 p.m., this is where I would like to be trading. And then PM, you sometimes have nice moves in PM. This is a retrace to OTE of the AM range. So right there, not even 0.705. It wasn't the daily range, you could tell, because, that just wouldn't be the daily range. But it is CE of the day. So that is something else that does align. But that was the long for Monday. That was really the only trading opportunity that you saw until this happened. And it happened quite aggressively to start, and then it was slow, but then it picked up again. So that was a bit of a harder trade because the holding was longer and it was in PM. Then we come to Tuesday. You can see at these highs, we would have to have our crack correlation, our SMT at these highs, which we did. We had a DC between this and actually it reswept at an open. So we had a double DC SSMT because we reswept it on open. That was with ES as well. So because we had like 4 crank correlations, our short was aggressive to the previous week low. So previous week low was the target. After True New York was inverse, we did not hit it again. These order blocks were aggressive enough, although at opening we did have a swing up higher, which was very brief. So CISD, TMSO, CISD, and then you see we have that breaker block right there. Stops can be above the breaker block, which is 2 microcycle open. I did not read this day very well, so I was not participating in shorts until later. So I didn't get this entry. This is a great entry if you would have taken it for a 30-minute PO3, opening in 9:45, which is our macro. We're leaving this, creating another internal CISD off of our breaker. So you could like put stops right there, 50, or like just place a limit at the breaker and put it like right there, 28-point stop. And still our target is the same no matter what. And if you don't hold it to there, we also have our time-based exit, which is at 2 p.m. if you wanted to hold it lower. But analysis would tell you true microcycle open. Okay, now we're changing structure and taking this higher. We're probably going to retrace to OT. And if you're going to hold it there, then you probably are going to get stop break even or close. 1030 candle right here. So when this CISD occurs with the 1030 candle, which is right here, then you would be out. Still incredible RR. I mean, you're literally a difference of 25 points away, when finding out later would cost you half the position or something like that on like a 400-point trade. So like doing this is a great way to exit. I love to do that as well because 1030 should be, just moving towards the direction of the drawn liquidity if it's not taken already, because that's how the 90-minute candles work. It usually just does that as well. So where is our next day? So next day is Wednesday. This is our reversal day. It was pretty hard. Actually, I traded a short right here, but it was very, very minor. So trading this session was really rough. Let's go on the 5-minute and see. This is our OTE retrace, like I said, for the daily range. So Wednesday low, OTE 0.705 right here, and then it actually double did it. 0.705 to 0.705. And I saw somebody take this. This is ridiculous, but that was the OTE retrace. No cracking correlation, no hiddens, nothing, no SMTs at this low. It just moved purely based on price. 0.705 of the OTE. True New York, we did have mitigation for, so it just didn't need any reason to go lower. After that, the rest of the day was kind of just playing out in PM because look how choppy this was up to, 10:30 is right. 10:30 is right there. That's a bad opening session. Most of it was PM, so trading was difficult that day. Then we come to Thursday. Thursday, 30-minute PO3. Let's just look from the 5-minute first. So 5-minute, our target was obviously true week open. We're right up there. So I was expecting this to go up and actually higher too. So higher than it did, but we still hit our target. Just barely. Like just barely. Look at that. It was insane that we didn't go higher. So on this day, we had opening PO3. We had an SMT between this low and True New York. So our True New York low, which is our 90-minute microcycle, we had that SMT, and then we also had a daily cycle with the opening of that session. I'm sorry, the opening of, where's Thursday opening? Well, it's Thursday opening. Okay, here. So Thursday opening with the low at like close to open. I think it was this cycle. And then, so we had a DC and a 90. After that, we just like immediately shot up to open or to True New York almost, but we came down, retraced for our 10 a.m., which was actually a sweep. It wasn't an OT. Like usually we'd have 10 a.m. sweep something at OTE of the range. This is a strange scenario where it didn't do that. It actually just like completely reversed, and we had our mountaintop, which is we had the buy model and the sell model in 9:30 and then right after at 10. So this is like, these are great shorts to take when you hold them past CE, because like expecting to hold it to there or to like 0.705, like sure, you can do that, and then we can retrace and then create our 1030 price and then continue higher from there, which I'm going to mark out really quick. So our 1030 price right here, create the CISD off it, and then move higher from there. But that did not happen. We just dumped all the way to that low and to True New York, which wanted to be mitigated on NQ, I guess. So that's what we did. That is the OTE retrace that we had. Didn't really have that we broke through, but that's the session, and that's where. Okay, where did we close? So 12. Yeah, 12 right there. So holding the 2 p.m. because I just deleted it. So holding the 2 p.m. would literally be when buy side is getting taken again and it's reversing. So 2 p.m. close is right there, like literally at the high. So these time-based exits are not random. I'm telling you that this is just two 90-minute candles. If we look directly at the 90-minute chart for the week, and I do want to put up actually our trading sessions. These are the candles that we're trading. These two candles, and then after 4:30, then it's the rest of the Asia session. So these big ass moves are just Asia session, and you're not trading that. So other than that, then these are the moves that I want to be trading. These are the ones right after the crack correlations. You can see that we marked out in orange here. I'm gonna mark out another one. Opening session. I forget what the crank correlation was. It was mainly just this off the low. So crank correlations are what help you trade open. There, yeah, we have that other one. And then usually the DC in the 90-minute, you see we had that right here. We had that right here. We had that right here as well. So the DC in the 90-minute is enough. True microcycle open is just like an extra confirmation. So Be careful of your stop when doing that, when not having a true microcycle open, because you probably will have to have a stop at the low so you don't get reswept into no TE when we're trading on like the smaller time frames. But usually, if you don't have true microcycle open paired with a DC or true microcycle open paired with a 90 minute, then the 90 minute and the DC is perfect. And especially when it resweeps, whenever we have a resweep and we create like a double DC or a double 90 minute, it's probably going to be an aggressive drop like this candle. And that's probably going to be the one that we hit our drawn liquidity for the week. That was the target. I mean, the other lows, I mean, we took the other lows, but yeah, that was the target. This low is a protected low somehow, so we're not trading to that for a little bit, but that was the confirmation. Then 90 minute. I tell you, the 1 hour doesn't always give you the best information because, like, right here, there's not really a gap that got supported all that well. But if you go to the 4 hour, it's too much. If we go to like the 15 minute, it's too little. So 90 minute, boom. 90 minute for value gap, perfect. After that, we have a BPR right here. And then we don't trade to any of this price action ever again. Literally in that candle, we do not trade back to it. Usually we trade to like CE of this, and then I would grade like the quadrants of this breaker or of this order block in the breaker, and I would look for it to retrace. So that's just like reading structure, not trading it at all. You wouldn't want to trade based on that. We're just reading price action, but that's just kind of how it goes on the 90-minute chart. Just very, very clean. You can see the candles like this. You would only trade to 10:30 because that's our next opening. Like it just tells you perfect timing. What are the candles you're trading? You're trading 190-minute, you're trading another, and that's basically the high of the day. You're trading 190-minute, and that's the low of the day. You're trading, where's our, this 290 minutes, and that's the internal range. Pretty shitty day, but still you're trading a good range. Here you're trading the entire range of the day. Here you're trading again the range of the day on a Friday, which let's go over Friday. It was not good whatsoever, like whatsoever. Look at that. Just keyboarding around this zigzag is really like this is awful unless you got in above here to shorts to like this low. If that would be the only trade you could have gotten, and you would have gotten such an assist by Trump. And if you got break even, then sucks to suck. You should have held the risk. After that, like this is just sloppy. OTE retrace here actually was nice, if I do mention. This OTE retrace I actually really liked. Right here, this inversion for value gap right here with the order block above that is like a perfect entry for low stop at True New York. So taking that long would have been incredible. RR, like even getting in like up there. Stop 705, 1 to 3. You can even lower your stop to just like that wick, and then go in with like 8 cons. So that is the review for the week. Pretty clean week for 3 days. I think 3 out of 5 days is not a bad week whatsoever, especially when you could have traded all the days and probably could have made some shit shake. So anyway, that is the recap. I hope this helps you read the weekly price action a little bit better. I do like this indicator, so I'm gonna mention it. New weekly opening gap by Kryptonite. I just like it to have it on for regular and electronic trading hours because it switches between the two and the gaps. So putting it on just helps me in reading the structure for the week, the PO3, seeing, where the gaps are inversing and where the like market maker model is hidden within the week really helps, that previous weekly low. And using the 90-minute candles to see the price action shift structure, that also helped because that gave me a really like clear fractal breaker to look at on the 15-minute and on the 1 hour. Mainly the 1 hour right there. If we count that as a breaker, that didn't get with the propulsion block right there. But anyway, that is it for the video. I'm gonna start messing with the charts, and I will see you guys in the next one. All right, take care, have a great weekend, and let's get ready to trade Monday because I got 5 accounts and I'm ready to trade.